let's look at Apple ahead of the big reveal. First off, read this disclaimer carefully. So here in the megatrends, I have a theme that I call portable technology, which of course means that the technology is portable, and Apple is here. They are in the phones, tablets, and laptop business. But the interesting thing now is all the chatter around their big reveal when it comes to VR goggles. There's been a lot of attempts to make really good VR goggles, but so far it's not been like a slam dunk yet. But of course, Apple, they do have a track record of some really great products. So let's look at Apple in this video. So 41% here from the 52-week low and basically at the highs. Here is Apple's website. It doesn't need a whole lot of introduction. So this is the big day. You can watch this live, and I am definitively going to watch it. So here is the chart for Apple. Okay, long-term weekly data points. So there's been a lot of moves into this big event. And one of the well-known phenomena in the market is, buy the rumor, sell the news. This also happens as we are breaking out. So we do currently have a full bore breakout, which is bullish, of course. The thing, though, is that we are also rather stretched. If we go here to the dailies, this is a very, very sharp move. If you look at the trend for Apple, there's a clear tendency for it to have pullbacks. So the question is, okay, how far have we gone? Like, how overstretched are we? The thing is that even if the reveal of the VR headset is like really amazing and people are very bullish, that doesn't mean that it will like instantly be reflected in the chart, because they need, of course, to sell the goggles as well, and the market has a very different relationship to news than what many people expect, which is why it is also very challenging to be an investor, because timing is such a huge thing. Anyway, here you can see the RSI on the weeklies. Looking long term, we are rather high, but we aren't really extreme yet, though. Looking at MACD, we do have the same MACD we had back here when we did have the major pullback. So we are certainly elevated. Looking at the daily data points, this is where the bear in me really is like, okay, if of course the news is really, really, really good, then sure, it could go even higher on daily RSI. It's possible, it's done that before, but we are definitively not low. I mean, this is real data. I didn't draw this myself. This is the market, okay? We are literally at the same level we were back here. Also, we saw the same data back here as well, and what followed was a pretty substantial correction. Looking at accumulation distribution, it is corroborating the move to an extent, but we don't see like a massive increase here in accumulation, so there is a limited volume on this move. But yeah, we are definitively overbought. So let me change this to megatrend like that. So here's Apple. So we are overbought, definitively, especially here on the dailies. We just are. As far as giving the bears a rating, I think I will give the bears. I give them -6. This is definitively very overbought, but we did see on the weeklies that Apple can get more extreme. Next, we will look at the seasonality. So to the left here, you got the average data over the last 5 years in green, 7 years in blue, and 10 years in red. If you see that I'm looking all over the screen, it's because I have like a 55-inch monitor in front of me. So it's huge, very good for charts, but it looks like I'm all over the place. But yeah, it's the same screen. Okay, so the seasonality does favor, a move into 12th-ish of June before we have some consolidation and give back. Looking at the table view, we so far have 3.7% for June. That's a pretty decent June. June has recently been very mixed. It can be very bullish or it can be quite bearish. Looking back here at 2018 and backwards, you did see that June was not a bullish month at all. July, however, is very bullish, and August is also more bullish than bearish. As such, there is more bullishness left in this seasonality. So I do think I will give the bulls, what will I give them? I think I give them a 4 on the seasonality. It's pretty decent what they have, but we have already seen quite the move from Apple. So there's that. And next we go to the fundamentals. So you have a price book ratio in blue. We are very high. This is not value. You are not getting Apple on the cheap. This is a level where historically we have seen major pullbacks. Back here, the same price book ratio, we went down. Here, a bit higher, but then a substantial correction. Here, correction. That's risky. Price to sales ratio also pretty high, not extreme, but elevated for sure. Also price earnings. But yes, obviously there's been some periods like back here in 2020 where valuations were elevated for a protracted time. Now let's just look here at the forecasts. You have a lot of analysts covering Apple, and you see here that the average price target is slightly actually below the current stock price. You do have some bulls here that are see a 14% plus upside, but quite a few bears. Here are the analyst ratings. Like Apple is pretty richly valued. This is not value. So taking into account the fundamentals here, obviously Apple has gone pretty far, and it is definitely rather disconnected from the valuations. So in this case, I will give it to the bears. I think I give the bears a 5 on this one. It's quite high. And of course, if the VR headset is really like amazing, they need to sell it as well. That's the thing, right? This, like, Apple is a very it's like a giga cap company. So even if the news are really good, that doesn't mean necessarily that it will then go up, because a lot of the bullishness about this announcement is priced into the stock. So that it begs the question, okay, how much of the bullishness is not priced in? Has too much been priced in? Meaning, could there be a pullback even if the news is really good? That's the tricky thing. Based on the valuations here, I think one could make the case that the market has really put a lofty valuation on the stock. The first thing we will look at now is Apple versus, let's start here with the Nasdaq. So there's a 79% positive correlation, strong. We don't get any long-term correlations with the leveraged ways to trade Apple. You have the AAPU, which gives you bullish leverage. The AAPD does not actually give you leverage, but it's a way to go short Apple without having to actually short the stock. So you use an ETF. So I want to look at the correlation here to see whether they track Apple well. AAPU, perfect correlation based on the data we have. And AAPD, almost perfect negative correlation, and that's definitively what we want to see. So these are some pretty interesting correlations. Meaning, based on the data we do have, they are very tradable. Let's look at XLI, consumer discretionary, because to some extent, Apple is definitively, well, their products are very like consumer discretionary. They're also a tech stock, so the XLK is in play. Now looking at the correlations, so 45% here with consumer discretionary ETF, XLI, 83% with XLK. Now let's look at the dailies. 80% with XLI, 93% XLK. So yeah, stronger correlation here with XLK. So what happens with the XLK? Issues. There are issues. Okay, let me copy this one. So yeah, TradingView, it's rather pricey and there's occasionally some issues. I'm on the top plan, and that one is rather pricey. So one would expect there not to be these kinds of issues, but yeah. So what happens with XLK is a big deal, and yes, XLK is pretty high. And interestingly, looking at the last two candlesticks, there is fatigue in the XLK. So Apple is not showing fatigue yet, but it's like the star. But the XLK, this is fatigue. On the weeklies, we are very richly valued. MACD is extreme. PPOs are very high as well on the weeklies. On the dailies, yeah, really high though. Really high RSI, PPO, MACD, you name it. And there's fatigue. Clear fatigue. Let's look at XLK here and look at the seasonality. You see here that going forward, it's a bit flattish, but potentially a bit of a pullback into later June. The table view, 1.4% so far for June. July is very bullish though, but that also could mean that June is a pullback month. July is like the comeback month. Okay. So let's now compare Apple with XLK. XLK like that. Okay. A bit messy, but what I do see here, let me draw it in like that and get my drawing tool. Okay, can't I shift? Oh. Okay, so here I'm having issues with the drawing tool. So my drawing tool doesn't work, but what I do see here is a head and shoulders pattern. So you can see here is the left shoulder, here is the head, here's the right shoulder. That's bearish. It could mean that Apple will enter a more protracted period of underperforming the tech ETF, meaning there could be rotations out of Apple into the XLK. And given the huge market cap of Apple as well, when there's a lot of money like pouring into Apple, it means that any rotation out of Apple is going to be felt a lot more. On the dailies, we are bouncing. Well, we did bounce from a low level on RSI, so there could be more of a move here, meaning the right shoulder is not like fully formed yet. So let's look at the seasonality. So I mean, the seasonality is frankly rather bullish though for Apple. To the left here, to the right, 2.2% so far for June. June can be pretty good for in this pair. July, we usually see Apple outperform the XLK. So it's a bit tricky comparing here the Apple with the XLK because Apple already has made a big move vis-a-vis the XLK. So the question is, okay, how much is not priced in? And the seasonality for the XLK is not that favorable going forward vis-a-vis Apple. Then again, we had the head and shoulder. I think I will give Apple a 1 here. A bit bullishness here on relative performance, but then again, it already has made quite the move. And we do see fatigue on the XLK. So yeah, we end up with minus 1.5 in favor of the bears. We are really overbought, really overbought. So it makes most sense to consider the bearish direction ETF. I wouldn't necessarily be like a big bear on Apple, but I think the data here is clear enough. The key thing, of course, is to have a stop loss. So let's look at considering a stop loss. Apple, like that, to get the chart. And you had the AAPD. Let me just get the AAPD here. AAPD. That's the direction, daily Apple bear 1x shares. So you don't get any like leverage. Um, Given that it tracks Apple so well, it might work holding for multiple days. The rule, though, is that when you get into these derivative products, which these ETFs are, they are not intended for holding over multiple days. It's only 1 day. The correlation was, however, almost perfect, but it wasn't as clean as what we got with the bullish one, so could be some tracking errors. Anyway, we are currently at an all-time high here for Apple. Shorting a stock usually is very dangerous, at least if you just go naked short. But Apple, it has a market cap of 2.9 trillion US dollars. So hypothetically speaking, sure, you could wake up one morning and have like a 2x loss against you going short Apple. It's extremely unlikely with this kind of market cap. If you short stocks with a very small market cap, like penny stocks, then yes, that's super dangerous. Holding overnight, all of a sudden you could have like a 10x loss against you. Very dangerous. But Apple, I don't see it like being a super dangerous bearish position. And when you use an ETF like the AAPD, then the max loss is 99.99%. So yeah, I think it makes sense here to consider a bit of a short on Apple. There's multiple ways to express this. One thing is that if you have other bullish positions, then shorting Apple could be a hedge against a pullback, because when you short a winner like Apple, which is more richly valued, then you can have a situation where it will pull back in conditions where other securities do not necessarily pull back, and that would be in the case of a rotation. So yeah. So looking at the Qs here, the QQQ, it's quite far away from the cheap zone. Seasonality suggests potential pullback. June recently being bullish, but not 2022 for sure. July is really bullish though. That's the thing. So I do think it makes sense to go a bit short Apple here, or use the Direxion ETF. However, only to a certain extent. The thing is that it could rip a bit higher. Then again, this is a very large cap stock. You have the buy the rumor, sell the news phenomenon. So yeah, I do think that this is an interesting play. Given that there's only 1x leveraged, there is a decent possibility of being able to exit it with a profit. Another thing, as I said, is to have it a bit as a hedge against a market turn down more broadly, because the stocks that are very overvalued, they will see the rotation first. So yeah. But yeah, I'm not like super bearish on Apple long term. I am bullish on the company. However, it's a gargantuan market cap. So it's way more difficult for it to move higher than other stocks. And when it comes to the VR phenomena, right? Well, let's say that the VR headset is amazing. Like it completely blows everything else out of the water. Well, let's think about this for a moment. Could the VR headset cannibalize other Apple products? Yes. It like if I can do computer stuff and tablet stuff and phone stuff with my VR headsets, then I will not have the same need for these other devices. So you could have a paradox where the VR headset is so good that it is bearish for other Apple products. So yeah. But yeah, thanks for watching, and have a great week ahead.